Hello everyone and welcome back to Forward Finance. It is February 22nd and we're going to be talking about Palantir today. We have some updates and their fourth quarter and their earnings came out recently, so let's check that out. So Palantir on February 16th, they released their 2020 fourth quarter earnings, and there was a negative reaction in the market as there was a slight profit expected of 2 cents per share, but actually it came out as negative 8 cents, an 8-cent loss. But this is not crucial. The market sold off, as you notice in the stock price of Palantir. It dropped below $30 again. It looks like it's going to open at 26 and change for the 22nd or the 23rd of February. Right now, that's what it's trading at, about 26.30 pre-market. But the revenue is up 40% on the year, for year over year for the last compared to the last quarter of last year at $322 million. So the revenue growth was continuing. So that's very bullish in the long term. So it looks like this might be a buying opportunity in the long term. As you can see, they're talking about revenue increased for the year, up 47% compared to 2019, 1.1 billion. And average revenue per customer was up to almost 8 billion. Average revenue from the top 20 customers was up 34% to 33.2 million. That's per customer. And there were a number of new contracts, which we've covered here, that happened during the fourth quarter, including with Rio Tinto, PG&E, BP, the Army, Air Force, FDA, and NHS, just to name a few. And there were a total of 21 contracts signed, each with at least a $5 million value. So a lot of things bullish to say about Palantir recently. And additionally, Cathie Wood, I should say, who is very, very popular right now, obviously with the success of her ARK funds, has continued to buy Palantir on this dip, especially. Also Tesla it mentions, but the focus here is Palantir, as she obviously sees this as a buying opportunity that the price pulled back. It was trading high 30s, low 40s briefly recently during February, but right now you can get Palantir for less than $28, $26 a share about today. And that's about a $50 billion or less high $40 billion market cap. So in the long term, that should be a good price to get in for the long term. For a trader, there's definitely possibility of Palantir going down more into the low 20s or who knows where. You never know in the short term. These things are very volatile. But yep, there's a lot to look at here. So if we look here, the other reason that the shares are probably dropping is the lockup period that had been there since the direct listing back in October or the end of September last year. That has expired. So now those shareholders are now free to sell those shares. They don't have to. They may hold them if they want to. So that could put downward pressure on the stock if they choose to take profit, as some of those or most of those shareholders, or all of them, probably have much lower cost bases, so they might want to sell. But overall, in the long term, like we said, we've got revenue growth, strong revenue growth that's projected to continue. They are forecasting 45% revenue growth for 2021, and for each quarter there, they're forecasting almost $350 million for future quarters, and operating margins of about 23%, so some profit margin. And we should see some profitable quarters coming up, and that should, in the long term, we are going to see that be good for Palantir's business if they can continue to sign contracts. 21 fairly large contracts this quarter. So I am going to be purchasing more Palantir. I haven't sold any shares. I'm going to be purchasing more at these prices. I think it's a long-term opportunity, and then we'll take it from there. So make sure you subscribe and like the video. I'm going to continue to cover Palantir, and I'm covering other companies, including SPACs. And check out the educational videos. I recently put up some videos about financial metrics, and screening for stocks. So thanks again, and I'll see you guys. This is Chris with Forward Finance, and happy investing.